Hello and welcome to another episode of the Uranium Market Minute. Today is Thursday, March 24th, and this is episode number 97. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Again, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, I shouldn't even have to say that last part. Thank you all for being here. Really do appreciate all of the support. If you are new to this channel, if this is the first Uranium Market Minute you've ever watched, welcome aboard. Please do like the video, subscribe to the channel, hit the notification bell, and you will be notified whenever we publish a new episode, which is almost every day. I was not in the office yesterday. I was in the office. I did not do a market minute yesterday. Pretty slow day in the markets. I had a number of meetings with our focus list companies, and that was a very productive day. And it was a good day to do it because the market was very quiet. A lot of traders in this space are what I like to call tourists. Some of the retail hot money seems to be trading on expectation of sanctions. Now, we did see some news come out that there were a document or an announcement coming from the White House essentially stating that the Russian uranium would not be sanctioned. Now, that is really interesting because we do have an executive order that has been signed by the president that is eliminating any new purchasing of Russian uranium products. Okay, so what does that mean? This is my takeaway. And again, maybe more news will come out around this and alter my viewpoint on this at this point. But as of now, I believe what this means is that U.S. utilities likely, some of them have near-term delivery expectations of Russian uranium products that could cause negative impacts to the grid in the United States, and therefore sanctions might be off the table. What does that mean? Previous purchases, previous contracts might still be honored here for delivery of Russian uranium. However, going forward, it appears that U.S. utilities will not be able to purchase further any products of uranium coming from Russia. This is a really big deal. And what we're seeing are really, really large moves in all elements of the fuel cycle. The price of uranium of U3O8 is holding high, just under $60 a pound. We've seen more than a 50% move in conversion in just a few weeks. UF6 is up, EUP is up, SWU is up, which is the cost of enrichment. All of these elements are up. And of course, U3O8 is up about 30% since January. So the fuel cycle is in a full-fledged bull market. And this situation is not about to dissipate and go back to normal. I'm telling you that. I'm hopeful that there will be a peaceful resolution with the actual kinetic fighting. But as far as geopolitical commodities trading between these major superpowers, I think this is a sea change. And I do believe that the commodity pricing for uranium is not about to reset to how it was a few months ago. I think that we're going to see a continued uptrend in the cost of uranium in all elements of that fuel cycle going forward. I'm going to talk a bit about flows and institutional coverage of the sector in the mailbag section. But before that, why don't we go ahead and run quickly through the daily scoreboard and look at the charts across the sector. Spot price of uranium is at $58.25 a pound mid-market, pretty sticky, ticking up and down a little bit, a quarter here, 50 cents there, but it's holding relatively high. Now we're seeing slightly reduced volume in terms of trading volume in the spot price, in the spot market, from last week and even from the week before. But the price is still holding high. That's a very good sign. Spot raised a small amount of 2.1 million yesterday. They did purchase 569,000 pounds of uranium. Interesting odd number. Sometimes you might think that these odd purchases with these not very round numbers has to do with a limit of availability. As we know, they are still sitting on over $50 million in cash. So now spot sits on 52.8 million pounds total. The NAV is 3.14 billion for the spot vehicle. Astonishing. Year to date, this is 11 weeks into the year, folks. They purchased 11.5 million pounds of uranium, and they've raised almost $600 million in new capital, 594 million. That's in the first 11 weeks of this year, 2022. Just huge numbers coming from spot. They did close at a slight discount to NAV that probably remained throughout most of the day. Going to the sector ETFs, we saw another huge increase in outstanding shares. 800,000 shares from URA yesterday. URNM reported an outstanding share issuance of 125,000 shares. That's 25.7 in mandated buying in the ETFs yesterday alone. Money continues to flow into the space. It really does. So since January 1, URA's outstanding share count has increased by over 21 million, URNM by almost 3 million. That's 557 million in mandated buying from the ETFs this year so far. This is still the first quarter, folks. Now we're seeing the two sector ETFs, the combined assets under management right around that $3 billion area. At the low print in March of 2020, the combined AUMs of these two ETFs was less than 200 million. So money continues to flow into this space. Very positive sign. All right, let's take a look at the charts. Bit of a more quiet day today in terms of volume. Looks like it's just about kind of an average volume sort of day for URA, slipping down from the peak volume that we saw a couple of weeks ago. And either way, we did see some dip buying. The ETF closed up 1.25%, and it definitely traded down to a negative print today, but it saw some dip buying coming in. It's really good to see. Even on these quiet days that sell off intraday, we are seeing a good amount of dip buying. And again, as I noted in the previous Uranium Market Minute, we are still strongly in this Livermore accumulation cylinder. And again, we're seeing this uptick in volume over the past couple of months. This is a really good sign. I think we are on the cusp of another big move. That doesn't mean we couldn't correct back down to the 20-day or even the 50-day, but it definitely could happen. It seems like we're still very strongly in an uptrend here. Broad Physical Uranium Trust trading up over 2% on the day. So they actually likely were at a slight premium to NAV, more than 1%. Volume still very low. So even with that slight premium to NAV, they probably didn't raise a whole lot of money, maybe a few $1 million. We'll have to see later in the day. And if they were purchasing any uranium today, obviously a very, very strong looking chart. It's trading very closely to NAV here. Now we saw a steep discount to NAV a couple of weeks ago. That dip obviously got bought right at that bounce off the 20-day. But this essentially is following the spot price here. And so this is a really beautiful thing to see, and the spot price of uranium in a very clear uptrend here. Let's take a look at sector leader Cameco trading very, very strongly. Finally saw a little bit of weakness the past few days after a really strong day last week, on Monday. And the volumes are looking very strong here, bullish across just across all of the indicators, very bullish looking chart. Overall, sector looks healthy here, technically speaking. All right, so just in the mailbag section, I want to mention something with regards to the trend change in coverage of this sector by institutional players and analysts. Okay, so there's something that you might refer to as an orphaned asset. This is an asset where investors lose interest entirely. Okay, this happened in uranium in the mid part of the last decade. Following Fukushima, obviously there was hope that the sector would rebound because it was in a pretty strong uptrend after the financial crisis leading up into Fukushima for a couple of years. And then of course that started the downtrend. But the real bearishness doesn't come right at the beginning of a downtrend, right? There was still some hope there until we started to see plans for Japan to shut down all of their reactors, and Germany then followed suit shortly thereafter. And over the course of a number of years, finally everybody threw in the towel, and it bottomed in 2016. Now, at that point, there was zero coverage essentially of uranium, besides maybe a couple of the very small sort of diehard smaller funds and institutions that were participating in private placements and trying to set price targets and things like that. But for the most part, the big boys were not going anywhere near it. Okay, so as investors lose interest in an asset, they become very pessimistic, volumes drop off, Wall Street sees no way to make money on the sector, there's no opportunity to earn an underwriting income, and hence you also see them drop all analyst coverage. They back away from the sector, they see no opportunities to make money off of. That clearly happened for uranium, and it's taken a long time for that to turn. So now where we're at now, clearly this has changed. Yesterday, another shot across the bow. Wall Street giant Goldman Sachs put out an internal buy on spot uranium, on the commodity itself, as it's trading just below $59. Now, you might think, well, why didn't they position back when uranium was in the 20s? Well, of course, there was no money to be made in the underwriting. At the time, there was not a lot of confidence in the sector because it was still highly, highly out of favor. Now you're going to see the big boys start to come in and take note because it's become more obvious. Yes, has the easy money been made? Perhaps it has. We are obviously not in the first inning of this trade, but the confidence in the sector and the liquidity is sufficient for the big institutions to come in. So this is another sign that institutional money, in our view, will continue to move into the sector because the outstanding fundamental case for uranium. The case for uranium fundamentally is outstanding across the board. Even with what's going on in the Ukraine, even with these scares over the past few weeks with the Zaporizhia plant fighting right around it, even with the Russians potentially occupying Chernobyl, et cetera, a lot of fearful headlines. We're still seeing countries double down on nuclear. We're seeing Boris Johnson in the UK say that they want to fast track new nuclear projects. We're seeing Belgium do a 180 and reverse course on their planned shutdowns. This is so even in Europe. Of course, where they're seeing a huge energy crisis with super high prices for natural gas and Russia potentially cutting them off. It's a messy situation, and nuclear is the clear winner of this situation. So that's obviously the fundamental case is extremely strong. Uranium is no longer an orphaned asset. Okay, it's becoming increasingly embraced, and now by big money. I've reiterated a few times that John Ciampaglia from Sprott has stated over and over that he is talking to very large funds, and they are waiting for essentially sufficient liquidity. I think something that's going to surprise people, most people in this space, is how aggressive institutions can be. Institutional money, when it fully recognizes A, that there's sufficient liquidity, that's paramount, right? And B, that a sector can be effectively cornered, can be moved very easily by funds flowing into it, that they can absolutely go for the jugular. And that is likely going to happen in this market. And we are not there yet. Okay, so we are in the early innings of institutional money finding out about this. I know it doesn't seem like that. If you've been in this investment for a long time, it seems like, gosh, it takes forever, even though the sector is up very strongly over the past couple of years. It still seems like it's very drawn out when we see moves like we're seeing in oil and nickel, et cetera. It's like, well, what the heck? Fundamentals are great here. Well, there's no futures market for uranium. So the price of uranium responds to actual buying. And that's what we're seeing across the fuel cycle. Everything is in an uptrend across the entire fuel cycle. And so the equities are going to need to play catch up here. And I do believe that's coming. All right, everybody. I hope everybody is well. And I will see you again tomorrow on Friday before the weekend. Be well, take care. Cheers.